Good morning. Good morning. Thank you everyone for joining us here today. It is Monday, December 14th, and we here at Harvested Financial are looking at the markets. So before we get into it, some brief disclosures that nothing involved in this conversation constitutes financial advice. This is solely for the purpose of education and does not constitute an offer to buy or sell securities. We at Harvested Financial employ multiple different methods of analysis, which are not fully disclosed in their entirety here. The only way we would give advice is under the terms of a contract. Check us out at harvestedfinancial.com/legal to see more of these disclosures. In the meantime now, though, we are going to take a look at the markets. And I am looking at the open today. So SPY up $2.62. Futures were up a little bit overnight, seemed to last through the open. So that's about 70 basis points in the green. IWM roaring up a 1.4%, 144 basis points. That's $2.65. Check out our Twitter. There was a really interesting trade on Friday with someone closing out a big winner in IWM. So at harvested_DAF to check out some of that open interest analysis. QQQs also up 245. That's only 80 basis points for the Qs. So what are we talking about today? Well, we're not actually talking about the market that's going up. I think we saw some of these indications on Friday afternoon. Vol really came in the afternoon, especially. Vol selling strategies, difficult to get some execution in there, but we see a continued leak in vol today with the market rallying a little bit here. So overall market drifting up, vol coming in, but one name that is not going up is SPCE, Virgin Galactic. So we know about them because they're one of the famous SPACs. At the end of 2019, they listed on the NYSE via a special purpose acquisition company. And so Virgin Galactic has been looking to put literally people on the moon. And they had some big news over the weekend, which was their first test flight. So I'm actually going to pull up their press release right now to pull out a couple quotes. So the recent test flight was on December 12th. And during the test flight, the rocket motor did not fire due to the ignition sequence not completing. Following this event, the pilots conducted a safe landing and returned to Spaceport America, New Mexico. So fortunately, no one was hurt, but this is the first of 3 test flights that they planned. So this one did not go off so well. One of the things that we're looking at here is the fact that stock's down about 450 right now, trading around 27.5. And I'm going to share my screen to just show how meteoric this rise has been. So pulling up my trade hawk, of course, and I've got space here. So what I'm looking at in terms of the stock price is just this yellow line that since November we've gone straight vertical. The beginning of November, stock was only trading around 18. We're all the way up to $34 last week. So off a little bit, like I said, down 450 today, trading around 27.5. Implied vol, this white line, also been ticking up. So we're at some pretty beefy vols in here that we're going to take a look at in just a second, and that's going to help inform our strategy because we've seen stock just surge upwards, coming off a little bit based on the sort of not so great news coming out of this test flight, but with vol up, with stock up, what kind of strategies do we want to look at here? Well, I want to set up a little bit of a butterfly, but I want to use a little bit of directional targeting here. And so typically we think of a butterfly as one of those, market neutral returns type strategies that, performs well, more of a volatility bet than necessarily a directional bet. You're betting on movement or lack of movement. But if we position our butterfly a little bit more interestingly and tactically, we can get some directional and volatility benefits out of this. So a couple things that come to mind when we're thinking about what's going on for space. Well, this was one of 3 test flights, like I said. They have 2 more, and the third is supposed to actually take Sir Richard Branson himself on that flight. So he is the founder of the company. It's very important for the company for him to demonstrate the efficacy, really, of his product. And so with Sir Richard getting on the flight in just 2 more flights, we are concerned about the potential PR implications of this. Is he really going to be able to get there and provide this sort of, much needed marketing boost to the company? Secondly, the other factor is just how many bookings they have that are potentially supporting this revenue. So they've booked several hundred tickets already. I believe they cost somewhere like 200 to 250,000 initially. They're hoping to, these initial 3 flights, prove their product. They're hoping to really generate more revenue and open up bookings again next year. To the extent that this falls through, that booking revenue is really going to collapse. So, a lot of the justification for these sky high valuations with all this demand for that product Well, if the product doesn't work, we're not so confident in that demand there. So we are going to look out to January expiration. So that's about 32 days out. And I'm looking at an implied vol of 110. So up there, pretty beefy vols. And, we can expect potentially, the more uncertainty comes out around this, the more, volatility might get bid up in here. However, in some ways, the uncertainty is already out there. Vol's already coming in or come out. So come up. So I'm going to look at a little bit of a directional targeting to get short some volatility here and with a bit of a directional bend. So I'm looking at a nice wide butterfly here. So you can see I'm looking at selling 2 of the 22s, buying 1 of the 16s, and buying 1 of the 28 puts. So this is in January that we're looking at. So we've got a $6 wide butterfly here. But it's centered around 22, which still is, quite a bit down from here. It's another $5 down. Market continues to leak off. We've dropped another 50 cents since we've been talking about this. But we look down $5. Potentially some pullback after all this enthusiasm. The initial sort of demo doesn't go quite as planned. So we're going to target a nice big profit zone here because we do have those $6 on either side. I'm looking at a trade price right now. Midpoint is $1.92. That offer to buy this would be about $2. So remember, when you are getting long a butterfly, you are paying a debit to establish this position, which gets you short volatility, and in this case, directionally targets the downside in January. So pay around $2 to enter this trade. That would be the most that you could possibly lose on that trade. Remember, the debit price on a trade is always the max amount that you can lose on a long position. So we are getting long a butterfly to get short volatility. And I'm going to show a little bit of what the effects of that volatility are going to be here. Looking at our max profit zone, of course, it's going to hit right at 22. So if we do drift down to 22, that's where we're going to see the most profit. $120 entry is going to, actually, this is a little bit of an old, so I'm going to refresh these numbers because vol is actually up since we did this. So let's do another what if. So it's not $120 entry. It's closer to that 190 that we saw. So, that 190 entry gives a max profit of just under $400 if it goes to that 22 level. So again, 22 level, we see the max profit of 400. Vol has come up since, establishing this, which is why I need to refresh those prices. But looking at this target zone, we've got a real nice wide profit zone in here. So anywhere between 18 and 28, we're going to see potential profit for this strategy. So distinctly to the downside, we're trading right around 27 right now. So we are potentially a little bit in the profit zone, but that maximum profit is going to come at expiration if we land at 22. Now, if you'll pay attention a little bit to these white lines, I'm going to show you just what the effect of volatility might be here. To the extent that vol starts to come in, I'm going to show you, watch that white line. It's, they each represent sort of, time over the course of the options expiration. So here we are at December 14th, 18th. We can see how over the course of time, to the extent that we're in this range, fewer and fewer days remaining, the value of that's going up and up because we are getting closer and closer to that, or we are sitting closer with less time remaining right at our sort of max profit zone. So of course that's going to happen right there on January 16th. But watch these white lines as we bring vol in. So if vol comes in, you'll notice those lines start creeping up. So to the extent that we see volatility come in and we're within this profit zone, our spread's going to be worth more and more. So that's the effect of that short volatility that we have. Because the less this is likely to move around and the less it actually does move around, the more likely it's going to center in right on our max profit zone. So this is a really nice way of directionally targeting with a butterfly while also remaining short volatility. So check us out every morning. We're here 8:35 Central, 9:35 Eastern, doing the daily bread. You can also check out our Twitter at harvested_DAFE because derivatives are for everyone. Like I mentioned, really interesting IWM trade in there to take a look at. And check out our website, harvestedfinancial.com. We are here delivering option strategies like this one. We have our model portfolios, the easiest set it and forget it way for investors to stay exposed to options volatility premium.